I want to share with you some tips on how to become a consistent and profitable trader without stressing out. It can be a challenging journey, but it's definitely achievable if you approach it with the right mindset. So let's dive into it. First off, you need to have a trading plan. Trust me, it's essential for success in trading, but don't worry, it's not rocket science. Your trading plan should be tailored to your goals, risk management strategy, entry and exit points, and criteria for selecting trades. This will help you stay on track and avoid impulsive trades. Make sure your goals are realistic and measurable. And don't forget to outline your risk management strategy, such as how much you are willing to risk per trade and using a stop loss to minimize your losses. When it comes to entry and exit points, you should have specific criteria for entering a trade, such as technical indicators, fundamental analysis, and a criteria for exiting a trade, like a predetermined profit target or even a stop loss. And you must also have a system for analysing the markets, identifying high probability trades. By following your plan and avoiding impulsive trades, you increase your chances of becoming consistent and profitable. So let's talk a little bit more about risk management. Risk management is crucial. It is important to have a solid understanding of the principles of risk management to help protect your trading capital and minimize your losses. Firstly, make sure you're using a stop loss. Your stop loss will be put at a predetermined price level at which you will automatically exit a trade to limit your losses. Never adjust your stop loss wider than you have predetermined your risk. And the only time you should really adjust your stop loss once you're in a trade is either to move it to break even or to trail your stop loss as you were in profit. Next, you should never risk more money than you can afford to lose. It's important to have a clear understanding of your financial situation and only trade with money that won't affect your daily expenses or lifestyle. This will help ensure that you don't put yourself in a difficult situation in case of a loss. Now make sure you determine your risk to reward ratio. Your risk reward ratio is a relationship between your potential profit and your potential loss. It's essential to have a positive risk reward ratio, meaning that the profit should always be greater than the potential loss. And you can also help yourself by using a lot size calculator where you can input your account balance, the trading pair you are trading, and the currency you're trading with. This will ensure that every single trade you are risking the same amount at each trade. Another aspect of risk management is to avoid overtrading. Overtrading can lead to emotional trading and impulsive decisions, which can ultimately lead to more losses. Instead, stick to your trading plan and avoid entering trades just because you feel like you need to trade. By following your trading plan and staying patient, you'll be able to make better and more informed trading decisions. Now, talking about overtrading, we also need to control our emotions. And so here are some tips you can do to control your emotions and make better trading decisions. Now, we've already mentioned you need to stick to your trading plan, and we're going to emphasize this again. Your trading plan should be your guide in making your trading decisions. If the trade setup does not fit your plan, do not take the trade. Practice discipline. Discipline is essential for success for traders, meaning sticking to your plan and not allowing emotions to sway your decisions. Now, this could mean waiting for the right entry point or resisting the urge to exit a trade too early. So if your predetermined target is at a specific point, stick to your plan and trade what your plan says. Also, manage your expectations. Now, trading is not a get-rich-quick scheme, and it requires a lot of hard work and dedication, so it's important that you manage your expectations, understand that losses are a natural part of trading, focus on the long term rather than the short term. And if you feel like you're a bit too focused on the short term and you are over trading, consider taking a break. Step away from trading, step away from the computer, and come back later on in the day, or even just come back the next day. You also want to reflect on your past trades. This is going to help you identify patterns not only with your trading, but also your emotions. If you can journal and write down how you're feeling when you were taking a trade and when you've closed a trade, this will help you avoid potential or even the same mistakes further in the future. Now, it's important to be patient. You need to remind yourself that the markets will always be there, so don't get hung up on that one trade that you're currently looking for or trying to force your way into. There will always be a big setup later on down the line, so if your current setup is not meeting your trading plan requirements, come back later. And to help with your patience, focus on the process of trading, not the outcome. Instead of worrying about the short-term outcome of your trades, focus on executing your trading plan and following your rules. This means staying focused on the process of trading rather than being distracted by the immediate outcome of a trade. And you want to learn from your losses. Losses are a natural part of trading. Instead of becoming discouraged by them, use them as an opportunity to learn and improve your trading strategy. Reflect on your losses and identify areas where you can improve on. Now, you also want to avoid chasing trades. Now, chasing trades is a common mistake that many traders make, especially in the early days of their trading career. This means entering trades based on an emotion or fear of missing out. And once again, stick to your trading plan. If the trade does not fit your criteria, do not make the trade. And remember to have a long-term mindset. Trading is a long-term game. It's important to be focused on building a solid trading strategy that can generate consistent profits over time. Instead of focusing on short-term gains, focus on the bigger picture and stay committed to your long-term goals. Now, you want to practice self-care. When you take care of yourself, you're better equipped to make sound trading decisions. And here's a few tips you can take to help you practice good self-care. Firstly, make sure you're getting enough sleep. Sleep's essential for your physical and mental health. Aim for roughly 7 to 8 hours of sleep per night and try and establish a consistent sleep schedule. If you're not in a position to have a consistent sleep schedule, maybe you work shifts or something like that, try and keep as consistent as you can with your sleep. This will help minimize fatigue, and when you're sitting there in front of the charts looking for potential trade setup, you will be in a better position to make decisions. And if you can, exercise regularly. Exercise is a great way to reduce stress, improve your physical health and your mental health. Make some time in the day for a bit of exercise, even if it's just a short work or even a full workout. By doing this, it's a great distraction, especially if you've taken a loss within the markets. Take yourself out, go for a walk, get some fresh air, or even go to the gym. Now, trading can be stressful, incredibly stressful, especially if you're waiting patiently for a trade setup and that one particular trade hits stop loss. So I would encourage you to practice mindfulness, meditation, or even deep breathing exercises to help you manage your stress. I myself personally, before I get onto the charts every morning, I always do my meditation, and it helps put me in a better state of mind to start making trading decisions. Now, if you're getting yourself overwhelmed, stressed out, or potentially burnt out, consider taking a break. Now, that could just be taking a break for the day, maybe taking a long weekend, or even taking an entire week off trading, just to give yourself the chance to clear your mind and come back with a fresh perspective. And finally, seek support. If you're feeling overwhelmed or you're struggling, whether it's mental health or you're trying to gain a deeper understanding of the markets, consider seeking help, whether it be joining a support group, reaching out to a trusted friend or family member, joining a community. There's lots of tools and resources out there to help you. Now, you need to prepare yourself. Now, becoming a consistent and profitable trader requires a lot of hard work, dedication, and discipline. By developing a trading plan, mastering your risk management, controlling your emotions, and being patient, continuously learning and practicing good self-care can help increase your chances of success when you're trading. Thank you for watching. If you found this video helpful, please give it a thumbs up, subscribe, and as always, trade safe.